We're in Paris for Paris Blockchain Week, and today I'm gathered with Guillaume from Flowdesk. Hi, Guillaume.
Hi, thank you very much.
How is crypto performing here in Paris?
Oh, just like the rest of the world, it's performing very well, to be honest. But particularly the vibe here recently, since last year, is really, really good. Lots of very innovative companies, lots of very innovative projects. So yeah, I think the vibe is very good, and that's what we are seeing, particularly in these days.
Mm-hmm. How has it been specifically for the digital asset world, like for Flodesk? Have you seen any trends arising? Like, how have things changed compared to last year?
Obviously, last year was really tough for everyone by definition. On our side, we were quite lucky because we experienced significant growth in our business. But yeah, everything went, from very quiet to very busy. And obviously, all of that was triggered by a certain set of events, notably the ETF side of things.
Mm-hmm.
So, I think we are entering basically 2024 in the most exciting manner. The market cap is at all-time high. The level of innovation is beyond imagination, notably what we see, on tokenization, layer 2, the infrastructure layer is coming out really strong of this bear market. So yeah, it's hard not to be more excited.
Mm-hmm. And Bitcoin is having a moment this year. Was this noticeable? Like, could you see this coming?
I think what is interesting with regards to Bitcoin, and I guess that's true to the broader extent in crypto, is the seasonality of this bull run is a bit different. It's happening a bit sooner, a bit faster than the previous one. And everybody was kind of expecting maybe to happen in 12 months, something like this. So, I think Bitcoin is definitely part of the equation, a bit less than historically, I guess we see it. But yeah, Bitcoin will be one of the key things to watch, and notably the developments around Bitcoin, because historically it's just been, an asset and period, and that was already quite impressive in itself. But all the developments around, Bitcoin, the Lightning Network, everything that is happening is also quite fascinating at the moment.
Mm-hmm. For everyone watching, I'll take a step back and ask you, like, how did you get in crypto?
So I come mostly from a scientific engineering background. I started as a rates derivatives trader at HSBC. Did that for 1 year, and one day there's a guy on the desk who talks about Ethereum. It was surging from like $40 to $50. I was like, okay, well, it's interesting. I look at it. The night I go home, I read for 2 hours about it. And I fell in love with it. I guess you can call this love at first sight, because it's the combination of everything I like and everything I know and everything I want to do. So I invested the little money I had at that time. Not so much, but it turned out to be quite lucky, because it was the beginning of the 2017 bull run.
Yes.
And then I decided to commit my life to the space, because I think it's one of the greatest innovation of the century. Who knows? And obviously wanted to be part of that equation.
Mm-hmm. And how did you how did Flodesk come about?
So, obviously all of us, we come mostly from a TradFi trading background. So, we didn't reinvent the wheel. But after I left my previous job, we worked on the cryptocurrency project, which was a fork of Monero. So, nothing fancy, but, lots of research and development. And we understood, all the problems that token issuers were facing with regards to liquidity. If you look at traditional markets, usually an asset is traded on a single exchange. Think about Tesla stock, for instance, against a single currency. It's very liquid, it works well. Here in crypto, all those crypto assets are traded on dozens of venues against, USDT, whatever stablecoin, Bitcoin, ETH, fiat currencies, of course. So, having created that coin, we understood more than ever, the problems related to liquidity. And we came out to this idea that nobody will be able to trade all these assets in a scalable manner, a compliant manner, with their own balance sheet in a prop trading fashion. So that's why we said, okay, we're going to create this market making as a service thing, where basically we're going to empower the token issuers so that they can do the trading themselves with their own money. And what we say is your collateral, your strategy, your P&L. And that's how we came up with the idea. And that idea is working really well these years.
Mm-hmm. How was the response? What year did you launch Flowdesk?
It was in 2020. It's 3 years and a half.
Mm-hmm. How was the response in the different markets? I'm thinking mainly maybe London, Paris, Because you're mostly Europe.
Yeah, we are. We are originating from Paris here. The beginning, we come from nowhere. Let's be very humble. So we built the company. The first year, we were just 3, 4, 5 people building this thing. We closed a few projects. It worked really great, and then we kept scaling. And I think it's only after we did the Series A, when we entered the 2023 bear markets, that we 2022, 2023, that we kept scaling the business. And it's only, to be very honest, very recently that our whole business completely boomed in 2023. In the most difficult market conditions, we did about 3x in revenues, 10x in volume. And yeah, that's really when we aligned, all these pieces of the puzzle, because market making is something that is very complex, particularly in crypto. It's 24/7, 365 days per year. You are quoting in the books. There is a HFT component, high frequency trading component, part of it. So from a technological standpoint, it's something. So it took us basically 2 years and a half, I guess I would say, to build this deep hardcore technology that allows us to do trading on more than 100 venues today. And that's once we've built all of that we've been able to scale this business really fast. And obviously we keep scaling it very fast today.
Do you see a trend towards more interest in being involved from traditional banks and the traditional finance world?
Yeah, there is this this dream of TradFi coming into crypto, and it's been 10 years. Since the inception of crypto. And I remember in the 2021 bull run, everybody also had this narrative, let's build prime brokers, TradFi is coming into the space, and so on and so forth. My deep conviction has always been that we need a very strong fundamental crypto layer before these guys can come in. And that means a whole bunch of things from a technological standpoint, of course, but even much more. And that's why the whole thesis of Flodesk from day one was let's take crypto native. Let's offer institutional grade level of service to crypto guys, which is kind of, it's a bit counterintuitive, because usually it's more like, okay, institutional grade, obviously it's for institutions. So we said, no, we're going to bring a next level of service to these guys, and we stayed very crypto native. So as a matter of fact, we grew, and we now we cover most of the assets. So we work with some of the biggest token issuers out there, and some of them I like to call them crypto institutionals, when you have balance sheet in billions of dollars and everything. But that's where we come from. And what is interesting is that almost mechanically we saw actors enter the space and reached out to us, because we have one of the best access in the market. So now we work with banks, we work with ETF providers. So I think it's happening. My gut feeling is that it is happening now. What we are seeing through the ETF is only the tip of the iceberg. Obviously, we'll see a much wider range of ETF coming, much more complex, linked to derivatives, basket of token, whatever you may think of. But it's only the first stage of the rocket, because when you look at the technological layer that we have today, which is essentially saying you can create a token for a penny and you can trade it everywhere, we see tokenization coming. And tokenization is going to be the second stage of the rocket. It's a 10 years journey, but yeah, that's going to be very big, and that's going to be driven by institutions. So tomorrow we expect, bonds to be on chain, like it's happening now. These are RWAs, but at the end of the day also, equities, even assets that did not have secondary markets, your car, real estate, whatever, it's going to come on chain. And I think it's the true purpose of crypto at the end of the day.
Do you think that's coming soon, like this year, next year?
I think there will be two phases. Right now, I think it's about bringing the yield on chain. We had stablecoin, they were yielding 0. Now they're going to yield 4%, 5%, whatever the money market fund rate is. I think it's beautiful. And that gives a very strong use case for crypto from a B2E perspective, but also from a B2C perspective. As an individual, I can put my savings into crypto and get, the Euribor, the whatever Fed funds rate, very, very instantly, very easily. So the first stage is bringing the yield on chain and creating a use case for that. I think that's what we're going to see now. I think now we're going to see a 5-10-fold increase in market cap of stablecoins, and the winners will be the stablecoins that are linked to government securities, to bonds, and that gives the yield back to the user. I think that's what we will see this year and the next year. Everything else is way too ambitious. It's not tomorrow that you will have the cap table of an SME that is tokenized, that is traded on Uniswap or wherever. It's going to happen, but again, it's going to take 10 years. So if we can already have, that yield on chain, this issuance of bonds that is made very easy, whatever, the risk of the bond, the seniority, if we can have that on chain in this bull run, I think it's a huge achievement, but that will pass the way for a much deeper and bigger revolution.
Mm-hmm. I see, like, as the technology becomes more user friendly, there's more people doing using it like actually in day-to-day life, so for payments and salaries and so on. And as this becomes more normalized, do you see like more, essentially, like if there's still some sort of resistance, do you see at some point like all the institutions actually being somehow involved in the industry?
I think at the end of the day, it's a very Darwinian environment. So whatever wins is the most efficient. Right now, about 10% of the GDP of the world is put into financial services. And it's been growing. It's been more or less doubling since the last 20 years. So what this means is that the complexity of finance is growing faster than the tools to use it. And we have to spend more money. Mm-hmm. But at the end of the day, this is friction. Finance is useless. My job is useless. No, I'm a bit provocative here, but you see what I mean. It doesn't deeply create value. So I think crypto or whatever innovation will win because it will be more efficient. And what we are seeing with crypto is a 10x improvement in efficiency, and particularly for financial services, when you are doing derivatives, when you have a CSA with a counterparty, when you can collateralize, trades on chain. We're talking about, deeply technical stuff for most of the people, but stuff that costs a ton of money for the financial actors. And I'm just giving an example here. So the day we can do that on chain in a very efficient manner for a fraction of the cost, of course, everybody will adopt that. Then, of course, there are questions about which stablecoin is going to win. Is it going to be a government-linked stablecoin? Likely, but these are the tiny details. But of course, it's going to happen because that's going to bring this 10% of the GDP that is pure friction to 5%, 3%. And then maybe it will go to 10% again because it will allow us to build even more complexity. Mm-hmm. So yeah, I think it's doomed to happen. And the key difference today versus 4 years ago is that the institutionals are looking at it heavily. The ETF event is a perfect example, but there is much more, obviously.
Well, when they come in, like, what are their main points of interest and points of concern?
I think let's take a step back. These guys, very legitimately, are very slow for all the reasons that we know. Mm-hmm. So at the moment, their point of interest is very simply, we want to touch this, we want to understand it, and in some cases, we want to distribute it because we have a financial incentive to do it. We're going to make money by distributing it to our clients. But I think we're still at a very, very high level. Okay, how do I get crypto? How do I store it in a secure manner? Do I want to go through a custodian? Do I have to go, from a regulatory perspective, go through a custodian? So, we're still at a very high level. We're not, okay, let's tokenize this stuff and put it on chain and use it as a collateral to borrow this thing. No, we're not there yet. So they are still viewing this, I guess, to answer, as an experiment and as a way to make money. Because at the end of the day, it's about making money. I think the ETF is the perfect example of that. And their concerns are always the same. They view crypto as the next relay of growth for their business, but they view it as a risk. So, and right now, it's the risk trade-off is really tough for them because they have very good businesses, and they're like, okay, are we gonna try to increase our business by 5% into going into crypto at the risk of basically burning the whole house? And that's why there is a few financial actors, even on the market making side, after the last bull run, we said, okay, no, we go out of crypto because okay, we make good money, we have good business, but this is creating too much risk for traditional business. And all of that, is a chicken and egg thing because it's about regulation, it's about transparency, getting everybody up to speed. So we see a strong convergence between the needs of those institutionals, the regulatory landscape that is evolving in the right direction, and the emergence of crypto native actors that are trying to be at the standard of these guys, and that's the ambition that we have at Flodesk, be kind of the bridge, and I think we are doing it relatively well. So it's coming, but again, we need to understand that the timing is way more different than the timing that we know in crypto. 4 years is not a lot of time, so let's take this time to build it slowly but surely, and it will happen eventually.
And as you touch regulation, it makes me think like which countries are you more strongly like you're betting on as a company?
So, I mean, one of the big theses behind Flodesk was obviously to bet on France regulatory landscape, and to a broader extent Europe. I mean, as you may know, most of the financial services firms, they usually operate in different jurisdictions than countries like France. We made this bet because we felt already at this time, back in 2020, that there was a strong and intelligent push from our regulator to say, okay, we're going to look at this thing and we're going to try to do something that makes sense. And that's arguably what they did, on the flat tax for crypto. I mean, a whole bunch of things that we could go through. So we made a big bet, which is essentially, we think that France will create the right regulatory landscape. We're going to build everything we want to distribute through that regulatory landscape. We hope that this regulatory landscape will serve as an example for Europe, MiCA regulation. It was not less obvious at that time than it is today. And we're going to stick to this. And that's exactly what we did. We built the whole company around that thesis. We are really happy we made that bet because it's proving us right. But of course, crypto is a global thing. So you can be regulated in France, in Europe, that's great, but it's a global business. Right now, we are operating 24/7 all around the world with offices all around the world. So the ambition is very simple for us. We want to be compliant and regulated in every jurisdiction we operate. That started with France and Europe to a broader meaning. Now we are working heavily on the Singaporean side of things because we see great momentum there. And obviously what will happen in the Americas will be also very important. So we're having a tight look at what's happening there.
The US regulation is maybe not the most friendly at the moment. How are you handling that?
I think with regulation, it's very simple. It's, first of all, you accept the rules of the game or you don't play the game. And there is no trade-off when it comes, to AML, KYT, all of this stuff. I mean, and we've seen it in crypto, and particularly the way crypto has been put in the light recently, the light of the FTX events, or whatever. We've not been in the best spot, I guess I'll put it this way. And if that means that we need to fight 3 times harder, if that means that we need to level up our standards 3 times than we should, I'm fine with that. I prefer regulation than no regulation. Of course, at some point, regulation can create too much friction, and particularly it can be annoying if there are multiple regulations. If you are heavily regulated and your neighbor is doing the same business as you do, but they are not regulated, obviously that creates an unfair advantage. But as long as the regulation is coming up globally with some kind of standard, which we see coming, I think we should be good. And again, at the end of the day, it's better to have a bad regulation than no regulation. And arguably that bad regulation is probably not be that bad. There is a lot of lobbying and education, obviously, to do with our regulators, but we are convinced it's heading in the good direction.
And as institutions, if anyone that works at an institution is watching right now, like how could they get involved? And more importantly, why would Flowdesk be a better option for them compared to the other options?
So first of all, we are not a better option in all the options, but there are definitely a few cases where we are extremely relevant. We are coming from a traditional financial background, deep engineering background, but we are a crypto native firm. That's the foundations that we have. We have one of the best access to liquidity in the market, both in centralized finance, decentralized finance. We are working with a good chunk of the top token issuers in the world. So we know what we are doing. And we have the pool of token issuers we work with who know what they are doing. So basically the way I'll summarize it is we are really good market access for these guys. Very simple one. We don't do too fancy stuff, we do very simple stuff, spot markets, bit of derivatives, custody, treasury management, OTC, market making, of course. But we basically see ourselves as a top regulated, compliant, and transparent actor. And that's why we've been really lucky, to work with some banks, some ETF providers, as I highlighted, and we have some really good news coming also shortly. So yeah, if they are looking for a deep expertise in access to liquidity, this is what we can offer.
And is there anything exciting coming up for Flodesk that we could share?
Not so much actually. We are making science progress every day. I guess that's already a big excitement. We were very lucky, to close a significant funding round recently. The company is growing really fast with a good combination of ambition and execution, I guess I would say. We are here to make science progress. So what we deliver to the markets, our message is very simple. It's innovative products. That's what we did with market making as a service, and we're going to keep delivering innovative products. So we will have very good news coming in the year, and the rest, is expansion of verticals and product lines. Now we are operating globally. We're about 110 people. We expect, to grow that to maybe 150 by the end of the year. Not that, the numbers count. I don't think it's really relevant, but yeah, and obviously we will have some great news coming from a regulatory standpoint with new licenses and new everything. And, our mission remains the same. We're committed to the token issuers we work with and to all the other counterparties we work with. It's very important to have a long-term vision.
Yes.
It's very important. It's a 10 years journey, minimum.
For everyone watching, if they want to read more and learn more about Flowdesk, where should they go?
So you can reach out, through our website. We obviously have a footprint in New York, Toronto, Paris, Singapore. We're opening London soon. So it's very easy to see us at the various events. Even though we try to stay relatively low profile, you can reach out to us through our website, on Telegram. We are in the groups everywhere. I'm also accessible to anyone who needs to engage with us.
Guillaume, thank you.
Thank you very much for the opportunity.